the natural gas market remains choppy, with prices caught in sideways action and using the $3 level as a key reference point. Seasonal demand has yet to shift meaningfully, as it is still too early to factor in freezing temperatures. From a demand perspective, the natural gas market continues to face limitations. Temperatures remain relatively mild across key consuming regions, which makes it difficult to envision a scenario where demand surges in the immediate term. Even though the September contract is expected to perform somewhat better than August, the absence of colder weather caps the upside potential. As a result, buyers may hesitate to commit aggressively, and sellers could start to reassert themselves once the recent run higher shows signs of exhaustion. Until heating demand begins to build, the fundamental backdrop suggests a market that is more prone to consolidation or retracement than a sustained rally. According to Global Commodity Insights, total U.S. natural gas supply slipped 0.6% from the previous week, with dry gas production easing 0.5% to an average of 107.2 billion cubic feet per day and net imports from Canada down 1%. However, this modest pullback in supply has done little to offset a steeper drop in demand. Total U.S. consumption fell 3.3% week over week, as cooler temperatures across the Midwest and East reduced the call for gas. Power sector demand showed the sharpest decline, down 6.7% compared to the prior week. Despite this bearish imbalance between supply and demand, prices remain buoyed by speculative buying, with bulls maintaining control in a market that doesn't yet have fundamental support. Technically, the market staged a modest rally in the early hours but is now struggling to extend those gains, holding near $3. This area has become a pivot, reflecting the tug-of-war between bulls and bears. The recent upward run was impressive, yet momentum has clearly started to waver, raising the risk of a near-term pullback. A decline could open the door toward the $2.70 region, especially if sellers aim to fill the previous gap. On the other hand, a breakout above $3.15 would mark a meaningful technical shift, potentially attracting trend-following buyers and signaling a change in market direction. However, without fresh fundamental drivers, that breakout scenario appears less likely in the short run. For now, traders should watch for signs of exhaustion and hesitation, as the market seems to be leaning toward testing lower levels before any larger bullish reversal takes hold. If no bullish developments emerge next week, natural gas prices appear destined to slide, with $2.70 acting as the next key support. The $3 pivot has proven fragile, and without fresh drivers to sustain it, the market is set to retreat sharply, leaving bulls on the defensive and highlighting just how precarious the current levels really are. Don't forget to comment, watch the previous video, and show some love for the channel. See you next time.